Hello everybody and welcome to the Technical Trade Room. My name is Joseph, and in today's educational video, we're going to go over Ichimoku charts, also known as Ichimoku Kinko-yo. As always, I need to start with a quick disclaimer. Statements by TTR or its members are opinions and not investment advice. TTR is not responsible for any investment decisions made using the information provided here. Improvements are not guaranteed. This material does not take into account your particular investment objectives, financial situation, or needs and is not intended as recommendations appropriate for you. You must make an independent decision regarding investments or strategies that are mentioned on TTR. Phew, that is a mouthful. Well, with that out of the way, let's get down to business. First, I'd like to start with a quick history of the Ichimoku chart. Ichimoku Kinko-yo translates into one-glance equilibrium chart in English. Ichimoku was created by a Japanese economic journalist by the name of Goichi Hosoda. Goichi started designing the Ichimoku chart in 1932 with the help of a team of around 7 people, most of which were university students, who helped him construct and backtest this strategy. Over the next 30 years, Goichi honed the Ichimoku system, had close friends help him test it out, and eventually released the finished product in a book that he published in 1968. This system was, and still is, extremely popular in Japan, along with the use of candlestick charts, but both were completely unknown to American traders until the 1990s. The Ichimoku system consists of 6 components. First is the Tenkan-sen, which we can also call the conversion line. Second is Kinjun-sen, which we also call the baseline. Third is Senko span A, which we can call the leading span A. Fourth is Senko span B, which we call leading span B. Fifth is the Kumo, which translates into cloud. And last is the Chiku span, which we call the lagging span. Alright everybody, to kick things off, I'm going to start by showing you the Ichimoku Kinko-yo as a whole. But don't worry, although it's going to be overwhelming at first, we're going to cover each of the 6 components individually and bring it all together. So by the end of this video, you'll be able to read the Ichimoku Kinko-yo just like the pros. So on your screen now is the Ichimoku chart, plotted on the Tesla daily price chart for the 2017 trading year. Ichimoku can be very confusing or intimidating at its first glance. I mean, there's the cyan line called the Tankan, a magenta line called the Kijun, some kind of Christmas nonsense going on between these green and red lines. There's a funky moving orange thing, and what the heck are even these clouds that are all over the place? Well, worry not, because we're going to cover all of these components in depth, so by the end of this video, all of these lines are going to make sense to you, and you can utilize the Ichimoku chart just like the pros. The Tenkan-sen, also known as the conversion line. We're going to keep referring back to the Tesla daily price chart over the course of this video as we explain each individual part of the Ichimoku. Now I've isolated the Tenkan-sen on the price chart, which is represented by the cyan line on the screen. Now what looks very similar to a moving average, we're going to cover and explain how the Tenkan is computed and what that means to you. The Tenkan-sen uses the 9-period high and the 9-period low in its equation. Goichi added the 9-period high to the 9-period low, then divided this number by 2 so he could find the middle point of the equity's movement within that 9-period time frame. Now, it's said that since Japanese markets were open 6 days a week, that Goichi wanted the Tenkan to look at a week and 1/2's worth of data, or 9 days. This is also a good time to note that Goichi felt that there was a human pattern to trading, so most of the Ichimoku components use specific time periods in their computation to reflect those patterns. Now let's discuss how the Tenkan is computed. Starting from the far right, our first and most recent candle is highlighted in yellow with the number 1 above it, while the 9th candle in the Tenkan's 9-period time frame is highlighted with the number 9 beneath it. We start by finding the high of the 9 candles in question, which is the high for candle 9, coming in at $346.73. Second, we look for the low of the 9 candles, and we find that in our second candle, which is now highlighted and numbered, coming in at $309.54. These two numbers are then added together, giving us a total of $656.27. This number is then divided by 2 to find the middle point between that high and low, which gives us the value for the Tenkan, coming in at $328.14. Now, to compute the next value in the Tenkan, we simply move our 9 candles 1 candle to the left. What was our second candle in our previous example now becomes our first candle, and what would have been our 10th candle in the last example now becomes our 9th candle. We start again by finding the high of the 9 candles in question, which is the 8th candle this time around at $346.73. Second, we look for the low of the 9 candles, and we find that in our first candle this time around, coming in at $309.54. Despite shifting the period left 1 candle, the highs and the lows remain the same, totaling $656.27. We then divide this again by 2, which gives us the same exact Tenkan value as before, $328.14. This process is then repeated, each time shifting left 1 candle, adding the highs and the lows of that new period, then dividing that number by 2 to figure out the center point of the equities movement for that 9-period time frame. Akin to a moving average, most of the components of the Ichimoku uses 2 values, divides them by 2, and then finds the middle point within a specified time frame. The Tenkan specifically looks at a 9-period time frame, takes the high and low, adds them together, then divides it by 2 in order to find the middle point of the equities movement within that 9-period time frame. The Kijun Sen, also known as the baseline. Let's now take a look at what the Kijun Sen looks like alone on the price chart. I've isolated the Kijun, which is the color magenta here. Both the Tenkan and the Kijun are very important parts of the Ichimoku, and there is even a trading strategy involving the two. But before we get ahead of ourselves, let's talk about how the Kijun is computed. The Kijun Sen uses the 26-period high and the 26-period low in its equation. Goichi added the 26-period high to the 26-period low, then divided this number by 2 so he could find the middle point of the equities movement within that 26-period time frame. It's said that since 26 trading days encompassed a month's time in the Japanese markets, Goichi used the 26-period time frame for the Kijun. Okay, let's discuss how the Kijun is computed. Starting from the far right, our first candle and most recent candle is highlighted in yellow with the number 1 above it, while the 26th candle in the Kijun is highlighted with the number 26 beneath it on the far left. We start by finding the high of the 26 candles in question, which is found on candle 11, coming in at $347.44. Second, we look for the low, and we can find that in the 17th candle, which is now highlighted and numbered accordingly, coming in at $300 on the nose. These two numbers are then added together, giving us a total of $647.44. This number is then divided by 2 to find the middle point between the high and the low, and this gives us the value for the Kijun coming in at $323.72. So in review, the Kijun takes the highs and the lows from a 26-period time frame and plots the middle point of that period. Now that we've covered both of these important components of the Ichimoku, let's talk about 2 major trading strategies for the Ichimoku. The first of these 2 strategies is called the Tenkan Cross. A Tenkan Cross occurs when the Tenkan Sen crosses the Kijun Sen. If the Tenkan crosses above the Kijun Sen, this is a buy signal. However, if the Tenkan crosses below the Kijun Sen, this is a sell signal. The second strategy we're going to cover is the Kijun Cross. A Kijun Cross occurs when the close crosses the Kijun Sen. If the price closes above the Kijun Sen, this is a buy signal. If the price closes below the Kijun Sen, this is a sell signal. First, let's go over an example of what a Tenkan Cross looks like. In this example, I've isolated the Tenkan Sen and the Kijun Sen. As discussed before, when the Tenkan crosses above the Kijun, this is considered a buy signal, and I've highlighted this with a green circle labeled buy on the chart in the bottom left. A sell sign occurs when the Tenkan crosses below the Kijun. So let's make our Tenkan cross below the Kijun on the right-hand side of the screen. Now I'm going to highlight that with a red circle labeled sell. So, in review, we buy when the Tenkan crosses above the Kijun, and we sell it when it crosses below. The second strategy, and a personal favorite of mine, is the Kijun cross. In the Kijun cross, we're watching both the price and the Kijun very closely. When the price of an equity opens below the Kijun, then crosses and closes above it, this is a buy signal. We can see this example 2 candles to the left of the Kijun label, which I've highlighted with a green circle labeled buy. Here, we can see that the candle opened below the Kijun but crossed and closed above it, showing a buying opportunity. The opposite of this is true for sell signals. When the price opens above the Kijun but crosses and closes below it, this creates a sell signal. I've highlighted an example on the right side of the screen with a red circle labeled sell. Here, we can see that the candle opened above the Kijun but crossed and then closed below it, showing us a selling opportunity. So, in review, we buy when the price crosses above the Kijun and then sell it when it crosses below it. Senko Span A, also known as Leading Span A. We're now going to see how the Senko Span A looks over the price chart. The Senko Span A uses the Tenkan and the Kijun in its calculation, but there's something very different about how it's plotted on the chart in relation to the Tenkan and the Kijun. Let's go over that together now. The Senko Span A uses the Tenkan Sen and the Kijun Sen in its computation. Similar to the previous components, Goichi added the values of the two and then divided it by 2 to establish the center point between the Tenkan and the Kijun. The Senko Span A is essentially a 17-period plot, as it is the difference between the Kijun, which is 26 periods, and the Tenkan, which is 9 periods. The major difference between the Senko spans, and the reason why it is called a leading indicator, is that Senko spans are plotted 26 periods into the future. Finally, Senko spans are considered a point of support and resistance on the Ichimoku chart. Let's show you that major difference right now. If we look to the right of the chart, we'll see that the Senko Span A continues past the most recent price. This is because the Senko spans are plotted 26 periods into the future. So now that we know Senko Span A is plotted 26 periods into the future, how exactly is it computed? We're going to need to look at the Tenkan and the Kijun values to do this. The Tenkan here is $328.14. while the Kijun is $323.72. If we add these two values together, then we get $651.86. If we then divide that number by 2, we then get a value of $325.93, which is the middle point between the Tenkan and the Kijun, and it's also our value for the Senko Span A. This value is then plotted 26 periods into the future, as seen on the far right of the chart. So in review, the Senko Span A is the middle point between the Tenkan and the Kijun, or essentially a 17-period time frame that is plotted 26 periods into the future. We look to the Senko Span A for potential points of support and resistance in the future. Senko Span A is not alone, however, as it has a partner in crime named Senko Span B. Senko Span B, also known as Leading Span B. Senko Span B is the partner to Senko Span A and has an interesting relationship with price. Let's overlay Senko Span B on the price chart now and go over why it's one of the most important parts of the Ichimoku chart. The Senko Span B uses the 52-period high and the 52-period low in its equation. Goichi added the high and the low from the 52 periods and divided it by 2, just like all the other components, to find the middle point of the equity's movement in that 52-period time frame. Just like the Senko Span A, this is also plotted 26 periods into the future. It said that since 52 trading days equated to 2 months worth of trading, and 52 weeks equals a year's worth of time, Goichi used the 52 period for the Senko Span B. Finally, just like Senko Span A, Senko Span B is considered a line of support and resistance on the Ichimoku chart. Let's show you now the major difference between the Senko spans from the Tenkan and the Kijun again, but with Senko Span B. If we look to the far right of the chart, we will see that Senko Span B continues past the most recent price. And again, this is because the Senko spans are plotted 26 periods into the future. Let's now cover how Senko Span B is computed. Starting with the furthest right candle, our first and most recent candle is highlighted in yellow with the number 1 above it, while the 52nd candle is highlighted with the number 52 beneath it on the far left. We start by finding the high of the 52 candles in question, which is found here on candle 51, coming in at $363 on the dot. Second, we look for the low, and we can find that in the 40th candle, which is now highlighted and numbered accordingly, coming in at $292.63. These two numbers are then added together, giving us a total of $655.63. This number is then divided by 2 to find the middle point between the high and the low, which gives us the value for the Senko Span B at $327.82. This value is then plotted 26 periods into the future, as seen on the far right of the chart. So in review, Senko Span B is the middle point between the 52 period high and the 52 period low. It's plotted 26 periods into the future, and we look to the Senko spans for potential points of support and resistance in the future. One thing many Ichimoku traders also believe in is that price is attracted to flat Senko Span B runs, which we'll cover more in depth very shortly. Now that we covered the Senko spans, I'd like to go over the major Ichimoku trading strategy that utilizes them, the Senko Span cross. A Senko Span cross occurs when the two Senko spans cross one another. If the Senko Span A crosses above Senko Span B, this is a buy signal. And if the opposite occurs, which is the Senko Span A crossing below Senko Span B, this forms a sell signal. Since these Senko spans are plotted 26 periods ahead of the current price, we are looking at those future Senkos 26 periods in the future when spotting an entry or exit signal at our current price. Now I understand that might sound confusing, so here is a visual example of a Senko Span cross. We've isolated just the Senko Span A and Senko Span B along the price chart. On the far left of the chart, I've now highlighted a spot where the Senko Span A crossed above Senko Span B with a green circle labeled buy. Remember, because the Senko spans would have been 26 periods ahead of the current price at the time of the cross, the entry point would have been 26 candles behind the cross. Although not depicted in this chart, that entry point is just off the chart. Now, let's go over what a sell sign is for the Senko Span cross. This occurs when the Senko Span A crosses below Senko Span B. In the upper center portion of the chart, I've highlighted where this happened with a red circle labeled sell. Again, because the Senko spans are always 26 periods ahead of the current price at the time, the entry for this sign was here, 26 candles before the cross. Now let's review that one more time. Although the cross happened here, the candlesticks above it didn't exist at the time that it crossed, and the entry point was here, 26 candles from the cross. So, in closing, when the Senko Span A crosses above Senko Span B, this is a buy sign. And when the Senko Span A crosses below Senko Span B, this is a sell sign. Kumo, also known as the cloud. Alright guys, first things first, the Kumo is your friend. I don't care what Susie Pigtail said on the schoolyard last week, it wants to talk to you. And when it does talk to you, it's going to tell you exactly how the equity is performing. Trust me, it has a lot to tell you. You've just got to know the language it's speaking. So, let's learn some Kumo. The Kumo is built from the Senko Span A and Senko Span B. The Kumo takes those two Senko spans, and depending on which one is above the other, it colors the space between the two Senko spans accordingly. The Kumo uses the Senko Span A, which, as we discussed, is the center point between the Tenkan and the Kijun. And it also uses Senko Span B, which is the center point between the high and the low of the 52 period time frame. Remember, the Senko spans are plotted 26 periods ahead, so this means that the Kumo is also plotted 26 periods ahead. If the Senko Span A is greater than Senko Span B, then the cloud is bullish and will be colored green, as our pseudo 17 period is currently higher than the 52 period, indicating a rising price. On the other hand, if Senko Span B is greater than Senko Span A, then the cloud is bearish and will be colored red, as the 52 period is currently higher than the 17 period, indicating a falling price. It's also important to note here that the colors for the Kumo and all parts of the Ichimoku for that matter, are customizable, and you can change them to fit your preferences. One of the most important things that the Kumo is trying to tell you is the trend. If the price is above the Kumo, then there is a positive trend. If the price is inside of the Kumo, then the trend is neutral. And finally, if the price is below the cloud, then there is a negative trend. Now let's take a shot at identifying trends using the Kumo. Starting right to left, we can first see a negative trend on the price chart, which I've colored in red and labeled accordingly, as the price for Tesla is currently under the Kumo. Although it was recently in the cloud after a quick bump up, it spent most of November under the cloud. In the center of the chart, we can see a neutral trend with some positive upsides to it, colored in yellow and labeled accordingly. We can see that from the beginning of July to mid-October, Tesla was inside of the cloud and moved sideways. Finally, to the left, we can see a very clear positive trend, which I've colored green and also labeled accordingly. From the end of the 2016 year till early July, Tesla very and clearly rode a positive trend. Let's get a little more in-depth on learning Kumo speak. First, the size of the Kumo should play a role in your assessment of the Ichimoku chart. The thicker the cloud, the stronger the current trend is, and the harder it's going to be to overcome that trend when the price eventually reaches that cloud. If the price is below the Kumo, then think of this as looking up and seeing cloudy skies outside. Now, if the price is above the Kumo, then think of this as being unable to see what is under the floorboards as you stand in your home. Although far from perfect, the Kumo in each Senko span serves as a point of future support and resistance on the Ichimoku chart. If the Kumo is bullish and the price is above the cloud, both Senko spans may serve as points of support. And if the Kumo is bearish and the price is below the cloud, both Senko spans may serve as points of resistance. Now, if the price is within the Kumo, then the top of the cloud may serve as a point of resistance, while the bottom of the cloud may serve as a point of support. Finally, look for flat stretches of Senko span B, as this shows extended sideways movement on the 52-period time frame, which could be areas of consolidation and lead to potential breakouts. Many Ichimoku traders believe that price is attracted to flat Senko span Bs, so keep an eye out for these potential price points. Let's now review how Tesla interacted with its Kumo over the 2017 trading year. First, I'd like to point out the thicker clouds from late February to mid-April and late May to mid-July. I've placed a couple of green clouds under the areas in question. Now, let's trace out the movement of Tesla's price between the beginning of the year to early October and see its relation to the Kumo. Next, I'd like to bring your attention to where Tesla bounced off of the Kumo in early and late March, where I've drawn a green line and arrow to show the price hitting the Senko span A, then bouncing upwards. Tesla then saw a massive run from late March till July, when it fell to a thinner portion of the Kumo. I've drawn a second green line and arrow here to show you where Tesla broke through the Senko span A in early July, then bounced off and rode the Senko span B till mid-July. After breaking under the Kumo, it started moving sideways, riding waves below and above the Kumo, but spending most of its time inside of the Kumo from late July to mid-October. I'd now like to take your attention to the red cloud I've placed above the Kumo from early December to mid-January. We can see that Tesla shot up from late November, broke past the Senko span A resistance, hit the Senko span B resistance, and then bounced back, eventually falling under the Kumo. Finally, there are three areas where I'd like to bring your attention. All three are extended flat tops of the Senko span B. As I discussed before, Ichimoku traders believe that price is attracted to flat Senko span Bs, and they represent areas of consolidation. I'd like to spend a little extra attention on the third flat top, because if we lined it up where the price was during the creation of this extended flat top, we'll see that after consolidating, it exploded up and touched the flat top, hitting it and then coming right back down. Now that we've covered the Kumo in depth and you can now speak its language, let me now share with you the trading strategy of the Kumo breakout. A Kumo breakout occurs when the price crosses the top or bottom Senko span of the Kumo. Now the price should open inside of the Kumo, and if the price crosses and preferably closes above the top of the Kumo, this is a buy sign. And if the price crosses and preferably closes below the bottom of the Kumo, this is a sell sign. Let's cover a quick example of Kumo breakouts. If we look center left to the spot where Tesla bounced off the Kumo in early April, which I've highlighted with a green circle labeled buy, I have an arrow pointing to the two candles where Tesla's price opened inside of the Kumo, crossed, and then closed outside of the top of it, creating a buy signal for the Kumo breakout trading strategy. As we've discussed, a sell sign for the Kumo breakout is the opposite, which is when the price opens inside of the Kumo, then crosses and closes outside of the bottom of the Kumo, creating a sell signal, which I've highlighted in the center of the chart with a red circle labeled sell. In this example, we would have purchased at the buy signal and then sold at the sell. So in closing, when the price opens inside of the Kumo, then crosses and closes above the top of the Kumo, this is a buy signal. When the price opens inside of the Kumo, then crosses and closes below the bottom of the Kumo, this is a sell signal. Chiku span, also known as the lagging span. In what is one of the most misunderstood yet important parts of the Ichimoku system, the Chiku span is the one part of the Ichimoku chart that sends new traders for a loop all the time. But don't worry, we're going to make the Chiku span make sense, and you're going to understand its importance to the Ichimoku chart and its trading strategies. The Chiku span takes the closing price and then plots it 26 periods into the past. Yes, you heard that right. It's the opposite of the Senku spans, as it plots the close of an equity's price 26 periods into the past. Although counterintuitive, the Chiku is an extremely important part of the Ichimoku, and it serves as a final check for all trading strategies using the Ichimoku. Think of the Chiku as an advisor in making decisions. It's going to tell you whether or not if you should go through with the trade, proceed with caution, or to avoid the trade altogether. Although not a necessary part of the Ichimoku trading strategies, it should always be considered before sending in your order. Now, if the Chiku is above the close from 26 periods ago, which would be the candle immediately lined up with the end of the Chiku, this would be a bullish sign. If the Chiku is inside of the candle from 26 periods ago, this is a neutral sign. And finally, if the Chiku span is below the candle of 26 periods ago, this is a bearish sign. Let's show you the Chiku and how it's plotted onto the chart. First, let's identify the most recent close and trace back the close from each candle, which I've done with a similar orange line. Next, let's darken the right side of the chart until we're 26 candles behind the most recent price. Now we can see the outline that I created, which covers the close of all of those candles. If we send our outline back 26 periods, we'll see that it lines up perfectly with the Chiku span created by the Ichimoku chart. This is because the close is indeed plotted 26 periods into the past. As one more example, I'd like to bring to your attention in the upper center part of the graph, where I've placed an orange arrow and traced out the stock's movement yet again. If we send this back 26 periods into the past, we'll see that it lines up perfectly again with the Chiku provided by the Ichimoku chart. I'd now like to go over a visual example of when the Chiku would be bullish, bearish, and neutral. First, let's identify where the current Chiku is and see what it's trying to tell us. I've placed an orange arrow labeled Chiku span exactly where the most recent Chiku span is located. It is currently inside of a candle, so this is a neutral sign, as the current price is exactly where the price was 26 periods ago. Hopefully now you're starting to understand the importance of the Chiku, as it allows us to compare the current price with the price from 26 periods ago. Now towards the middle of the chart, I've covered in red an area where the Chiku is giving us a bearish signal, as it is below the price. If you're trading a bullish strategy, this would be a warning sign for you, but it would be a welcoming sign if you're trading a bearish play. Now, on the left side of the screen, I've highlighted in green where the Chiku is above the price and giving us a bullish signal. If you're trading a bullish strategy, this would be a welcoming sign, but a warning sign if you're trading a bearish play. Although very confusing at first, the Chiku span is an important part of the Ichimoku chart. It plots the close of an equity 26 periods into the past and is used as a final arbiter in deciding to enter into a trade. The last of the major Ichimoku trading strategies that we're going to cover in this video utilizes the Chiku span. A Chiku span cross occurs when the Chiku crosses the price. Since the Chiku span is plotted 26 periods into the past, we're looking for when the Chiku crosses the price from 26 periods ago as a signal for entering a trade at the current price. Now, if the Chiku span crosses above the price from 26 periods ago, this is a buy sign. And if the Chiku span crosses below the price from 26 periods ago, this is a sell sign. Let's cover an example of a Chiku span cross now. Over on the left-hand side of the screen, I have highlighted with a green circle labeled buy an area where the Chiku span crosses above the price. Again, because the Chiku is always 26 periods behind the current price, our entry for the trade would be here. Now, let's go over a sell signal for the Chiku span cross. In the center of the chart, I've now highlighted with a red circle an area where the Chiku crosses below the price. Again, because the Chiku is 26 periods into the past, our exit for the trade would actually be here. So, in closing, we enter into a trade under the Chiku span cross when the Chiku crosses above the price from 26 periods ago, and we sell that position when it crosses below the price from 26 periods ago. Congratulations, everybody. We've not only covered each of the individual parts of the Ichimoku chart, but we've briefly covered 5 major trading strategies for the Ichimoku. In honor of this, I'd like to take you back to the opening picture I showed you at the beginning of this video so you can appreciate your newfound understanding of the Ichimoku chart. Now it doesn't look so intimidating, right? We've got the Tenkan Sen, which is the middle point of the highs and the low of a 9-period time frame. The Kijun Sen, which is the middle point of the highs and lows of a 26-period time frame. The Senko Span A, which is the middle point of the Tenkan and the Kijun Sen. The Senko Span B, which is the middle point of the highs and lows of a 52-period time frame. And we also now know that both the Senko spans are plotted 26 periods into the future and come together to create the Kumo, which we use for trend spotting and support and resistance finding. Finally, we've got the Chiku, which plots the price 26 periods into the past and is used as a final arbiter for trades. If you were able to watch this video from front to back, then you most definitely deserve a reward. So I'd like to extend an invitation for you to come join the Technical Trade Room. If you're interested in technical analysis or looking for a great community to be a part of, please feel free to come join our outstanding equity trading community on Discord. We offer the following for free to all of our members: daily market conversations, real-time voice chatting, daily and weekly watch list, access to knowledgeable traders, custom Thinkorswim studies and scanners, and educational videos just like this one. Over the course of the entire video in the upper right-hand corner, I've had a link to our Discord channel. If you are not currently on Discord, plug that into your web browser, create an account, and it'll bring you right to our group. If you currently are a member of Discord, again, plug that into your web browser, and it will automatically invite you to the group. Thank you so much for watching, everybody. Please like this video and subscribe to our channel for future content from TTR. We wish you good trading and hope to trade better together with you. This is Joseph from TTR, signing off.